So hello guys, good morning. Okay, so this is the morning outlook video. So I wanted to do a quick video to help us understand what the market is likely to be doing today. Okay, so this week has been a week full of events. Major one we had was the FOMC. So the FOMC came out on Wednesday, and then we saw the impact of the FOMC. Initially, the dollar. This was actually what happened at the FOMC. This is the dollar index. So the dollar index, it has the ticker DXY. The DXY is the dollar index. So when the dollar index is actually the index that tracks the US dollar strength, what the US dollar is doing. Is it appreciating? Is it weakening? Is it strengthening? That's what this is the index the index that tracks what the US dollar itself is doing, right? So there are some other indices for tracking other currencies. Uh, there's an index for tracking the GBP, the JPY, and all that, right? But this is the dollar index. This is the most important index, because this is the US dollar affects most of the currencies that it's usually paired with most of the currencies that we trade, whether it's directly or indirectly, right? So every currency, every asset, basically every asset that you trade in the market is correlated with the dollar in some way, right? Positively or negatively, right? So whether you're trading gold or you're trading oil, it always has the dollar always has an effect on every commodity there out there, every asset out there, whether it's indices. Of course, most of the biggest indices are based in the US. So what the Fed does, what the dollar does, what the US dollar does affects the indices, right? So for example, indices in the US like the S&P index, like the Nasdaq, like the US stocks, whenever the dollar appreciates, those the stock market will usually fall. Whenever the dollar appreciates, the stock market falls, right? So whenever the dollar weakens, which means it falls, it is usually a positive sign for currencies, indices. Okay, so that's why we focus more on the dollar index. And the dollar index, what's happening in the dollar right now is reflected in all currencies, basically, all currency pairs. So now this was what happened at the FOMC. This right here is when the FOMC came out. Okay, so the dollar initially fell down, and then eventually it appreciated after that. It started going up. So that's what we saw at the FOMC the other day. And that was very important because we said that the US Fed raised interest rates, and then the interest rates initially, when it came out, the market wasn't so sure what the next phase would be, what the next projection of the Fed would be. But by the time the Fed chairman Powell, when he did a meeting and did a report, did a meeting, a press conference 30 minutes later, the market could see clearly. That's why you see the market reverse here. Okay, so now today we have a major event, which is a non-farm payroll, non-farm employment change, basically. Non-farm employment change. Here is it. Okay, so this is November 3rd. We have some news today. We have one BOE monetary policy rate. That's for GBP. Oh no, this was yesterday. Sorry, let me move to today. So today is Friday. Friday, we have two major news events today. And we have the Canadian employment change. This is going to affect the Canadian dollar. Okay, for those trading the Canadian dollar, this is going to be this is going to be a very important um, event to watch. Okay, so for the more important ones that we are going to be watching for at least three, we have the average hourly earnings. Okay, month-on-month average hourly earnings. That's the average hourly earnings on the average for as the US. And then month-on-month there means that compared to last month, compared to the other month, because this news right now is for last month. So it comes out this month, but it's for last month. So it's basically what was the hourly earnings for last month compared to the previous month, which is for September. So this news now is for October, but it's being compared to September. So previous is September. This is 0.3 was September. No, sorry, 0.3 was September, which is previous. And then this forecast now is that the market is projecting that the same thing is going to happen in October. In October, which is what we're expecting today. So non-farm unemployment change basically means that it's basically the labor data for last month, excluding the farm industry. The labor data for last month, excluding the farm industry. Okay, then on unemployment rates. So unemployment rate right now in the US is very low. It's at record low. It's at 50-year low. It hasn't been this low in 50 years. So 3.5% is unemployment rate. And basically in the US right now, the employers are the demand for labor is far more than the supply of labor, which means that employers are literally looking for workers in a lot of industries. The demand far outweighs supply of labor in the US right now. You see, so unemployment levels is very, very low, very, very low, and then it's been projected to increase a little this month. Okay, it still remains the same. That's of course what we're going to be expecting to see by 1:30 p.m. today. Okay, so these three news right here. First, the USD are going to be very, very important. Okay, so that's a major event today. It comes out every once in a month. Some of us are aware of that. All right, so let's look at a little bit about what we're expecting to see. Okay, if it's positive, we're going to see the US dollar appreciate. It's going to rally. The US dollar is going to buy. And whenever the US dollar buys, it means that all currencies that have USD as a base currency, just like USD JPY, they are going to appreciate. If the dollar appreciates, it means that all currencies that have USD as a base currency will also appreciate. Okay, so if you're trading the CAD, like you're trading USD CAD, you have to be careful and watch, because there's also a report coming out of Canada today that has to do with employment. Okay, so if the dollar is appreciating and the Canadian currency too is appreciating, there might be a little bit, you might have a challenge trying to trade that, at that time. But of course, it's important I personally, my recommendation is stay away from the market during the time the news comes out. When the news is coming out, stay away from the market at that time. Watch the market first. Usually when the news happens, it will give the market direction with where you can then trade in that direction after the market has given a solid, clear direction. Okay. So, but if you're trying to trade the news, except you have a particular news trading strategy to trade the news, it's advisable to stay away at the time the news happens. Okay? And a lot of news right now say they could be challenging to trade. Okay, if you're trading this news the other day and you first of all see price move down like this and it moved up, even if you were initially in profit on the sell side, now when it moved up, what's going to happen to your profit? It's gone. So, but if you waited for this move to happen and you can see, huge candle in the buy direction, you could then now know that, okay, I'm going to, if I buy, I will be in a substantial profit. Then you can then make your buy. So it's advisable, bottom line, to stay away from the market during the time of the news. Let the news pan out first, except you definitely have a strategy for trading the news. Okay. So, but if you don't have a strategy for trading the news, which is basically for people who are experiencing that, if you're not in that category, just stay away from the market. Watch the news first. Then when the news has happened, then you can down trade. So what we're seeing now is let's use several things. We are seeing what is called a bullish flag. That's what we're seeing now. So what's called a bullish flag. The bullish flag is basically an impulse movement. Impulse means that huge candles go in a particular direction in sequence, just like this. This is an impulse move right here. Okay. This also is an impulse move. So when an impulse move happens like this, then what you will notice is that there will be a flag, which is like something that looks like this. To be a little kind of correction. Okay? Notice this, you see that this is the way a flag is. You see something, a huge stake or something for holding it. Then the flag is some kind of a cloth that's tied to it. So this is what we call a flag pattern. So a flag pattern was what formed here immediately after the FOMC happened, and then you can see the price rallied up. So what we're also seeing now is another flag, what looks like another flag pattern. Okay? What looks like another flag pattern is what we're seeing now on the DXY. This is the dollar index. Okay, so it looks like market is going to rally again after the news comes out today. Let's add another thing. This is Fibonacci now. Let's use Fibonacci. So when you add Fibonacci to it, you will see that price came to the 50% retracement. This 50% retracement and the 61.8% retracement, where it says 0.5 and 0.618. In between these 50 and 61 is what some people call the Q zone, which means that price always seems to reverse around that area. Okay? If you see price buy very huge, typically you will see that price usually will reverse around the 61.8 or around the 50. In between the 50 and 61.8 is when you see a reversal happen most of the time. And then what we are seeing now is that we have seen that price has already reversed into the 51.8 right now, into this 50, 61.8 region right now. Okay, so this is the region I'm talking about now. This is the region I'm talking about. So price has already reversed into this region right now. So it may mean that we are going to see price beginning to make a buy later on when non-farm payroll comes out. Okay, so we might be seeing price appreciate when non-farm payroll comes out. Okay, so that's that. And also see when I was talking about the 51 and 50, 61.8, let's look at this. We'll draw a Fibonacci here right now. So we'll draw a Fibonacci here right now. We see that this reversal right now, we saw this flag movement. You see that? We saw this flag movement here also. We saw this huge flag movement right here. So now you can see that price retrace into the same this zone right here is the 50, 61.8 zone. Look at it here. That's so you can see that's where price started buying. So it's a very important area to look at. You have 50% here, you have 61.8. So in between that place is when you will see price usually reverse. And that's the area where we are sitting on here right now. We are sitting inside that zone right here, right now. So we might be seeing when non-farm payroll comes out, we might be seeing price buying and okay. So when price buys and goes up, it means that USD JPY is going to be a buy. Okay, means that USD JPY is most likely going to be a buy. But here's what I will tell you: you will not see a significant movement in USD JPY in the currencies today before non-farm payroll comes out. Non-farm payroll is probably in another 5 hours or so. Okay, but you may not see any significant movement. You might just see like price is moving as though it's just waiting for something to happen. Okay, so personally, my recommendation would be just hold on at this time and then wait for non-farm payroll to come out, and then you can now see the direction of the market, and then you'll be able to trade. Okay, so for USD JPY is going to be buying if USD appreciates at that time. USD is most likely going to be selling off. USD is most likely going to be selling off. And from the analysis we dropped in the group now, you will notice that Euro USD has just been in a huge downtrend, consecutive red candles, day over day, consecutive red candles. So this is most likely still going to be what we're going to still see today when non-farm payroll comes out. We're probably going to see Euro USD dropping again to the downside. USD and USD probably dropping again to the downside. You can see the huge move that happened. Let's say yesterday was massive, so there's still potential for more downward movements, right? There's potential for more bearish movement all of this after the non-farm payroll comes out. Okay, even gold made a huge move, sell off yesterday. It rebounded a little bit, but when the non-farm payroll comes out today and the dollar strengthens, it's most likely going to be benefit the. It's most likely going to make gold crash again. It's going to make gold fall again. Because the gold has an inverse relationship with the dollar. Okay. So this is the outlook. This is what we need to be looking out for today. And then we'll just be patient and hold on and wait for nothing. And then see the direction of the market and we trade after that. Right. So I'll see you guys later on. Right. News comes out, I'll be able to do another update and after the news comes out to see what has happened and what we should